Today, I'll share with you the top 4 best monthly dividend ETFs that you can buy right now in 2023. ETFs or exchange rate funds are a great investment vehicles that can provide the investors a diversified portfolio of stocks and bonds, but not all ETFs are created equal, and in this video, I'll focus on the ETFs that are giving great monthly dividend payments. So without further ado, let's dive into our top 4 of the best monthly dividend ETFs for 2023. The first pick is the iShares Select Dividend ETF with the ticker DVY. This fund seeks to track the Dow Jones US Select Dividend Index, which is composed of 100 high-yielding dividend US companies. It means that among the biggest holdings of this ETF, you can find great companies such as Altria, AT&T, and Verizon. Plus, among 30% of the total assets of this ETF are located into the utility sector, followed by the finance, the consumer staples, and the materials sectors. As of 2023, this ETF is giving a great dividend of about 3.5% per year, which is paid on a monthly basis. And one of the big pros of the iShares Select Dividend ETF is that it has some pretty low management fees of only about 0.38% per year, which is representing some annual fees of about $38 per $10,000 invest. Add to this ETF has a great track record of dividend growth over the last 10 years, where its dividend yield has grown on average of about 7.3% per year. And by investing $10,000 in this ETF 10 years ago, this would currently be worth slightly over $25,000, or an average annual return of about 10% per year. Plus, compared to the average funds of its category, this ETF has some lower level of risk while having some higher potential of return. So it definitely represents an excellent potential investment for the income investors, but wait until you see my 3 other picks. Now, the second pick on my list is the Invesco S&P 500 High Dividend Low Volatility ETF with the ticker SPHD. As its name is saying it, this ETF seeks to track the performance of the S&P 500 High Dividend Low Volatility Index, which is composed of 50 high-yielding US stocks with low volatility. This means that even in times of high volatility on the market, these kind of companies will tend to be more stable than the average, while also providing to you some excellent dividend payments. And once again, among the biggest holdings of this ETF, you can find great companies such as Altria, Verizon, AT&T, and Kinder Morgan. Quite similar to the first ETF, but in their case, the real estate sector comes at the first place with about 18% of the total ETF's value. After, you can find the utilities, the consumer staples, and the communication services sectors. As of 2023, this ETF is paying some great 4% dividend yield payments to their shareholders on a monthly basis. The Invesco S&P 500 High Dividend Low Volatility ETF is also quite affordable with some management fees of about 0.30% or $30 per $10,000 invest. And one of the big benefits of investing in that particular ETF is that by investing in high-yielding companies that have low volatility, this comes reduce your total risk in your portfolio. Additionally, this ETF also has an excellent dividend growth track record of more than 5.6% of growth of their dividends over the last 10 years on average. And over the last 10 years, by investing $10,000 in that fund, this would currently be worth slightly over $25,000 or an average annual return of about 10% per year. However, you can see that despite having pretty much the same level of risk compared to the average funds of its category, this ETF unfortunately has slightly less potential of return because of the low volatility of the companies within it. It is obviously due to the fact that usually the low volatility companies will tend to obviously lose less value, but at the same time to gain less value than high volatility companies. Nevertheless, this ETF is perfect for people that are close to retirement and that are looking for stable companies that will pay them some great monthly dividends. Now, for the third pick on my list, I've went with the Invesco KBW High Dividend Yield Financial ETF with the ticker KBWD. This ETF seeks to track the performance of the Nasdaq Financial Sector Dividend Yield Index. So KBWD is investing in US financial companies that are characterized by their super high dividend yields. It is why among the biggest holdings of this ETF, you'll find companies that are pretty much unknown to you, such as Armor Rate, Annaly Capital Management, Orchid Island Capital, and Ellington Financial. In fact, over 90% of the total companies found within this ETF are are actually some small cap companies, which is reflect in the total risk compared to the average of its category, where you can see that this kind of ETF has slightly more risk due to the nature of the companies found within it, but at the same time it has the same potential of return compared to its peers of its category. By investing in KBWD, you can expect to pay some annual management fees of about 0.35% per year or $35 per $10,000 invest, and that same $10,000 invest 10 years ago would currently be worth slightly over $15,000 or an average annualized return of about 3% per year. However, if you're looking for the highest monthly dividend ETFs, this fund can be very interesting. Indeed, with a current dividend yield of over 13%, this ETF can be very interesting for investors looking for high passive income flows. But keep in mind that by investing in that particular ETF, you are investing in one specific sector, which is quite risky as well. Finally, for the last ETF on my list, I've chose the iShares Preferred and Income Securities ETF with the ticker PFF. This fund is quite special because it tracks the performance of an American index composed of US preferred and hybrid securities, where it has both the features of a debt where you can receive some great dividend payments and at the same time some equities features when you can have some great capital appreciation. This strategy can be very interesting for investors looking for higher potential of return compared to what the bonds can offer, but at the same time to have lower volatility compared to what the dividend stocks can offer. It is why among the biggest holdings of this ETF, you can find great preferred shares of companies such as Citigroup, Wells Fargo, and the Bank of America. Plus, with no surprise, the financial sector comes at the first position with over 69% of the total assets of this fund, and after you can find the industrial and the utility sectors. Add to this an important characteristic to take in consideration when investing in that particular ETF is the credit quality of the companies found within this ETF. And in that case, we can see that the vast majority of these companies are actually considered as some high quality businesses. But at the same time, we can notice that about 23% of the total companies found within this ETF are considered as some junk bonds or companies that have a rating of less than 2B. The characteristics of these kind of companies is that they are usually way more risky to go to bankruptcy compared to high quality companies, but at the same time they have some higher premium, meaning that they have some higher potential of return. Nevertheless, PFF is still considered in the average of its category in terms of the risk and the potential of return. And by investing in that ETF, you can expect to pay some annual management fees of about 0.45% per year or $45 per $10,000 invest. But despite these higher fees compared to the other ETFs on this list, this fund is giving some great 7% of dividends per year to their shareholders, which is obviously paid on a monthly basis. So even if over the last 10 years the average annualized return hasn't been that good, this ETF is giving you the possibility to diversify the sources of income that you will have in your portfolio. But now that you've found what are the best ETFs that can pay you dividends every single month, you might be wondering, hey, but Louis, what are the differences between the ETFs, the mutual funds, and the index funds? Well, to see the answer to that question, check out the video that's gonna be right over here, and I will see you soon. Peace!